Another day, another story. SBI, or State Bank of India, is one of the largest banks in India with a market capitalization of over Rs. 3 lakh crore. In order to evaluate SBI stock values, we can perform a fundamental analysis that involves analyzing the financial and economic factors that affect the bank's performance. One key metric to look at is SBI's revenue growth. In the last 5 years, SBI has shown steady revenue growth of around 4% per year, indicating that the bank has been able to maintain its market share in a competitive banking industry. Another important factor to consider is the bank's profitability. SBI has a strong track record of profitability, with a net profit margin of around 3.5%. This means that for every rupee of revenue generated, SBI earns 3.5 paise in profit. We should also consider SBI's debt levels. The bank has a debt-to-equity ratio of 13.6, indicating that it has a high level of debt compared to its equity. While this may raise concerns about the bank's financial health, it's important to note that SBI has been able to service its debt effectively and has a strong credit rating from major rating agencies. SBI's return on equity, ROE, is another important metric to consider. ROE measures the bank's profitability relative to the amount of equity it has. SBI's ROE has been consistently high over the last few years, averaging around 14%. This suggests that the bank has been able to generate strong returns for its shareholders. Finally, we should consider the economic environment in which SBI operates. As a major player in the Indian banking sector, SBI is subject to macroeconomic factors such as interest rates, inflation, and GDP growth. In recent years, the Indian economy has been growing at a steady pace, which bodes well for SBI's future performance. In conclusion, SBI's fundamental analysis shows that the bank has been able to maintain a strong financial position and generate solid returns for its shareholders. While concerns about the bank's debt levels are valid, SBI has shown that it is able to service its debt effectively and has a strong credit rating. With a favorable economic environment in India, SBI is poised for continued growth in the coming years.